Happy Monday, everybody. In today's episode, I'm going to tell you a little story about how I ripped off the shower handle today when I jumped in the shower. And we're going to check on the robots, and I'm going to talk about a mistake that I made when I didn't check the charts on Friday. All right, I hope you enjoyed the video. Leave a comment below. Tell me how you're doing. I'll see you soon. So it's Monday morning. I'm jumping in the shower, not like right now, but just a little while ago. And I ripped the handle right off of the shower. Like ripped it right off, and it just kept twisting and twisting, and the water just kept coming out. Hey, happy morning, everybody. This is Rob Booker. This is the Traders Podcast, and today's episode is sponsored by Moen, the faucet people. Just kidding. It's sponsored by Home Depot that helped me get a universal replacement for the faucet. What a cluster. That was a giant mess. Anyway, not only did that happen, but then on top of that, I jumped in to check on the robot account. And guess what happened? All right, I'm gonna describe to you the situation that happened, and if you're watching on YouTube, you can actually see it. So, I am running the robot on the Euro British pound, and it got stuck in a trade. It wasn't a bad loss. The total loss right now is $78. So we're not talking about any kind of significant loss. And I got stuck in a euro pound trade. And so I took a third trade. And I appeared to have taken the third trade at basically exactly the wrong spot because it just kept going lower. So I was in a bunch of trades, or two trades, and then I took an extra trade at 87.10. And so 87.10 was the price at which I took this third trade. And I took it before it really gave me a signal to take a third trade. And I'm not upset about that. It doesn't make me mad that I did that. It simply proves the fact that if you trade too early, then there's a problem. And I wasn't patient. I was doing an Instagram live today, and my friend Greg Mikulowski, the author of Attacking Trends or whatever, great book, he got on there, and I said, don't we often overtrade, and isn't it the case that we're often not patient enough and we don't wait for the trade to come to us? And that's so true in this case in particular, that I didn't wait for the full trade to set up. And I could have. I should have. There's no reason why I couldn't have just waited. I got anxious. I got excited. So what's happening now is this. After I took the third trade, and it's the third buy trade, and none of these are big losses, and there's no danger that anything significant is going to go wrong with my account. After I took that third trade, price continued to fall against me, and I ended up losing 1/3 of 1%, right? These are all very small losses. And then on Friday, oh, this is so terrible. So I didn't check the robots on Friday, but on Friday it set up the real trade, and price kind of bottomed out and created this thing that I look for. Now, I've talked about it on the podcast before, and if you're watching on the YouTube channel, you can see this, but I'm going to describe it, and it's going to be easy enough for you to do on your own charts. What I do is I have an indicator that looks for price to be oversold on 5 time frames at the same time. And what that means is the relative strength index set to 21 will go oversold on the 1 minute, 5 minute, 15 minute, 60 minute, and then the 4-hour or 240 minute charts. And when that happens, it prints this green line that goes up and down the screen. And that is go time. That's when, statistically speaking, there is a very strong likelihood that price is going to move in the opposite direction. Not a lot. Doesn't have to be a lot. Doesn't have to be a huge amount. But it's typically at that moment going to start moving in the opposite direction. And that's a good sign that I should take an extra trade, and I should have that trade be significantly larger, like 2 or 3 times larger than the first trades in the set. And if I do that, all of those trades can close, and I can get out of the trouble, so to speak, that the account has gotten into. Well, because I didn't check the account on Friday, I didn't get into that trade. And because I took the other trade too early, this is a combination of two things that really should have never happened. I hate to say should have never happened, but that's exactly what it is. And and there's no risk that this is a significant situation or anything's wrong. I think $19 lost, $8 lost, $29 lost on these trades. These aren't huge numbers. And this is the smaller of the two robotic trading accounts. And I have huge amounts of margin. And day after day after day, the robot just continues to make significant amounts of money. Percentage wise, I think we're up for the month 1 to 2%, 2% almost. Yeah, almost 2%. It's hard to see the numbers on the screen here because my profit info indicator is all squished up for some reason. But it's just another lesson. Why in the world do I not just check it for a few minutes every morning? Is that so hard? Is that so difficult? I mean, for goodness gracious, I get up at 5 o'clock in the morning or 4:30 in the morning, and I just didn't check it on Friday. It's just a reminder. I don't need that much time, but I got to at least put those 5 minutes in. It's laughable. I mean, I spent 5 minutes doing lots of other things on Friday. Why couldn't I spend that 5 minutes just checking on the trades? Imagine now if it were 15 years ago and I was taking enormous sized trades and all of a sudden all of these things had happened and I was losing an incredibly large amount of money. That would blow. That would be the worst. And at least that's not happening. And I feel pretty great about that. For those of you that have been asking this question, I still trade the same old robot that I always traded. I said 2 years ago in Sydney, Australia, and in London and everywhere else, I said I'd still be trading the robot 2 years from now, and I still am. I trade the same robot. It trades 19 to 20 currency pairs. It trades 24 hours a day, 7 days a week. I don't have to check it every day, but as this podcast episode and YouTube video proves, I should check it every day. And it simply compounds small gains over time. And if you're the kind of trader that wants to put together a track record that proves that you know how to trade and proves that you don't take big losses, and you are tired of the hamster wheel, that you just go, oh, I'm going to trade this new discretionary strategy and I know it's going to be the answer and I'm going to trade big because it's got a really great success rate. And then because you've traded big and it's difficult to trade a discretionary trading account, things go wrong. If you're tired of all that, I got tired of picking direction. I got tired of trying to say, yeah, I know it's going to go in this direction or the other. I got tired of knowing, in quotation marks, what was going to happen next. And so I just trade with the robot. And a couple times a month, 3 or 4 times a month at most, I'll take a discretionary trade. And I'll take it when the statistics show that it should work. And even then I miss those. And even some of those don't work, right? Because discretionary trading is difficult. And I have to stop out of those sometime. But by keeping my trade size small, nothing bad really ever happens. Anyway, I'll keep you updated on the trade. I'm pretty sure that this is going to get worse before it gets better. Like it's going to get a lot worse before it gets better. And it's going to be a good example of how I deal with something that went wrong and it was my fault that it did. And I got myself into this situation. It should be interesting to watch me get out of this situation. It'll be super boring if today the euro pound recovers and moves far enough to get me out of all these trades. That'll be super boring and won't give us any lessons. But I love you all. Thanks for being here. Thanks for watching. Thanks for listening. Thanks for subscribing. As always, the podcast and the YouTube channel is sponsored by Forest Park FX. If you're interested in trading the FX market, contact Forest Park FX to open a Forex account and get cashback rebates on every trade you place. Go to forestparkfx.com. That's forestparkfx.com. Forex trading carries significant risk of loss. Terms and conditions will apply. See you in the next one.